Okay, Tasty Trade Nation, I wanted to do a real little quick thing on what Karen the Supertrader does, how she manages her positions. Because it's one thing to put on a position, but it's another thing to manage it. All right, so back in the day, let's see, I just put on this today on Iron Condor, which is a golden gecko. I'm just trying to take advantage of high volatility. I cleared out a lot of my positions because I want to start actively trading just the SPY more because of volatility finally popped, as you can see here in the charts here. So here's SPY. So I want to take advantage of this high pop in volatility, and if it collapsed, it could go up. I don't know, but I'm this is what I'm trading right now. Okay. So one way, you just got to watch your positions. If you see them going like so, for example, this is in a position I have that has 21 days to go. It's the vertical side. I just did the put side on a down day. And you can tell here I sold the 192 put. So that means I'm betting that the S&P 500 will finish above $192 at the end of 21 days, or the October 18th expiration. Okay, as you can see, I'm down a little bit. See how it's down right here? Okay, so I collected 105. I'm down already this much, right? Okay, so not a good, right here I'm down. Okay, so not a good thing, right? So, but I still have a lot of, the SPY is currently at, let's go look, go to the trade page. SPY is at 196.75 and it went up a little bit today. So on your trade page, when you have positions on, it'll be marked by these white flags. So what Karen does is once a position touches like 70% out of the money, she closes it and rolls it and moves it further out, usually within the same month, and she uses the weeklies, but to collect more premium. But let me just show you what that means. So the closest position I have on right now that's going to be tested is this one right here. Okay, so if you click on it, it'll show you I have one position on at October 18th, the 192 put, but so it went up a little bit today. But let me just show you, what I'm talking about. So what you want is, what if you want to know what's the probability of that finishing out of the money? Okay, there are two ways you can do that. One is you could drag a put to where that position is, and it'll tell you right here. Okay, so you just got to remember what you're looking for. So I'm going to go slow here. We want to find out October 18th, 192 put. Okay, so what you do is you grab this, click it, click the put once, and you're looking for the October 18th, 192 put. Now you see the bottom here where it says, the bottom says drop to sell. So if you're selling something, it's going to be on the bottom half of the axis here. If you're buying something, it'll be over here. So of course we're selling a put, that's why it's negative, right? So it's going to be on the bottom half. And we're looking for the October 18th, right? Right here. And we're looking for the 192 put. So see the price is right up here? Okay, so we're looking for somewhere down here. And we're looking for the 192 put. And you can tell what we're looking at in this bar right here. So again, here's that bar. I'm looking for the 192 put. Nope. Here we go. Right around. I'm sliding it over and I'm watching up here, okay? So I'm sliding it over and I'm looking for 192. Where is it? Here we go. Here it is, right? Then you just click and it drops, okay? So you double check. You have the 192 put, October 18th, 21 days, right? That's the position we have on. And so look, my probability of profit on this position right here is 79%. Okay, if you want to double check, you can click this leg and you can go at 74%. Okay, so this is getting close to being tested. So it's 4% away. So let me show you how you can roll. Oh, I'm sorry. That's one way to do it. A faster way actually is if you just go to your Thinkorswim platform, type in SPY, go to trade, right? And you have the 190 put on the October, right? So you just look for the 192. Here's the puts. Look for the 192. And this is what I sold. So currently right now it's selling for $1.19. To buy it back, it would be $1.20. So here's your probably out the money right here, 72.70%. So I know it's getting close to 70%. So this is something I might want to roll and maybe pad myself so it doesn't go in the money. So I know it's current on the dance floor. I'm just kind of showing you a different way you can manage your positions. So what you could do is go back to Doe, go to your positions. These are the positions I want to roll, right, or adjust. The one I sold the 192 put. So in Doe, all you got to do is, all right. Oh, you also want to find out how much you're down in the position. So meaning like if you close it, what happens? How much do you have to buy it back for? And how much you have to buy it back for? If it's a you can kind of figure out what you're down. So this position, I'm down like 19 bucks, right? Is that right? Yeah, the gain is 19. So I'm down 19 cents. So I have to collect at least 19 cents to break even on this trade. You know what I mean? If I put on a new position, I want to roll it, collect another 19 cents at least to make up for that loss. So what you want to do is you can click two of these, right? Click on roll. Okay. So now it's going to ask you what date you want to roll the buy side and what date you want to roll the put side. See how it says weekly right here? So I'm rolling it out. It's the same strikes, right? The 192, but I'm rolling further out, buying yourself time. Look, I can collect 16 cents for that, which is good, right? That's what I lost. All right. So, but it's not quite enough. So what Karen does, she can either double the position, meaning put two contracts on to collect more, okay, or and move the strikes out. So the reason why she wants to move this position out, so it says back to about 80%. Okay, so let's say she moves it to about right here. Let's see, right? Can I move it out one more? Hold on. Okay, let's say 82. All right, and of course this stays at the same 2 standard deviation line. But see, now you have to pay 32 cents. Okay, so she doesn't want to do that. She wants to be able to collect more money. So we can do a couple things. We can try going further out. Okay, so we'll hit one click on one expiration, and now we're on October 31st, right? Probably 80%, which is, but it's a 27%, 21-cent debit, excuse me. So I'd lose money. I'd have to pay to do it. That's not what she wants to do. She wants to collect 21 cents, well, in this case 19 cents to break even on the trade. She doesn't want to go put more money after bad money. So how can we collect more? You can move these positions out like this, see, and it changes it to a credit. Or in her case, because she's managing other people's money, she wants to close it within the same month. So this is the further out she could roll. She goes, okay, God, at least I'm not paying, so it's 5 cents. I need to collect another 19 minus 5 is what? I need to collect another 14 cents. So she can put on, or she can put on 4 positions. She could, instead of one contract, she could sell 4, and this would be a 20-cent credit, right? To make up the, the difference. Or she could say, maybe I'll put on this positions twice, and maybe put on some call positions as well. Okay, so for example, you could you could hit review and send once. Then where it says quantity, we're going to change it. So we're going to change this. We're going to do, oh, I'm sorry, quantity is over here. Time and force day, and we're going to do a credit. We're going to do a price, and we want to change the quantity. So to change the quantity, we are going to double click. Oh, I'm sorry, wrong button. We can double click. I thought there was a way to do both. Hold on, let me check something here. Order type, settings, that's fine. Go to review and send. Type deals 111. I want to add a quantity, so hold on. Okay. Lock the price, net credit time. Why am I must be going brain dead because I can't remember how to change the quantity. I know we could, well, here's one way to do it. Okay, so you could click the put, right, and another screen, double click, I'm sorry, another screen will open up. Here's your quantity. So let's say I increase this to 2. See how the credit goes up? And I want to click on this, right? And then 2 contracts as well. Okay, so now I'm collecting 94 cents at the end of October, which is more than what which is more than what I need to make up any difference, right? Because I was down 21 cents before, so I'm collecting more than enough. So I could roll it, okay? So what I did was I rolled it out. It's the same month, but just 2 weeks of further expiration out, all right? And now I can collect 94 cents. Okay, so what she means by she doesn't want to give any profits back, this is one way to do it. Now, if you look at my buying power, though, it's going to reduce my buying power by $2,200, which is my max loss, and I collect $94, which is more than enough to collect the to make up for the difference in my other trade, my original trade. Okay, so what are my chances of not losing money? I have an 82% chance of not losing money. Okay, so that's how she could do it, or that's how you could do it as well. Um, and that's the beauty of having enough capital. And now this is an IRA account, so there's no margin. But that's the beauty of having a margin account because you have more buying power. Okay, I'm not doing that yet. I'm going to hang off a little bit, but I did want to show you that so you could see how to use Doe to do that. Another thing you could do is I'll double click this again. I'll drop this down to 1. I'll double click this again. Oh, done. Double click this again and drop it down to 1. Okay, done. So here, 4 cents credit. Well, what else could you do? Well, why don't we sell some calls, okay, to maybe get this up to 19 cents. So to do that, right, click on call, and we're going to go to the same October 13 weekly, right? So we're going to click on it real quick, double click it. Oh, what the heck? Oh, you know what? I did a roll. So I can't, you would have to do a new trade. Okay, so in addition to this, this is a roll, so I can't add on anything more to it. But you can remember your position, right? I mean, it's really simple. And then you could create a new trade. So I know I can collect 4 cents here. I need another 15 cents at least, right? To make up the difference. So you could clear what can we sell? So you can clear this. You can click on call, and we know we want to go to the October 31st weekly, and we want to sell some more calls. So it's right here, right? Well, what can we do? Um, since it's not a roll, we can just kind of click on one, like say the 205, and see up here. Up here, you could, you know what I mean? We could just look where we're. I know we have to be at the October 13th because it's the same weekly, and let's just click on here. Okay, look at that. So if we sold this as well, we collect another 31 cents. But don't forget that's naked, so we have to buy a call as well on the same side. So we got to whoops. So go to October 31st weekly. We want to move it out to this blue. See that blue line? Just so we're at 2 standard deviation. Click. Okay, see? So I can collect 31 cents. See what I mean? So if I'm worried about collecting more money and I'm worried about my losing trade, what I did was, again, I took this position, I rolled it, which all that means I closed it and opened up another one further out to 80% probably out of the money and further out in time to the October 31st. Remember now, I only could collect 4 cents. So how do I collect the difference? Well, she also sells calls on the other side to make up that difference. So if you add the $33 and the 5 cents, I more than make up for the difference of anything I lost. So now when this new position closes for full profit or whatever, or 50% of max profit, I more than made up the difference. And that's how she manages her positions. I hope that helped. Any questions? Shoot me an email, hititmonkey@gmail.com, or just use the shout box down below. All right, and thanks a lot.